So picture this, you find your dream home, but the problem, you haven't sold your previous one. So what can you do? That's exactly the problem of illiquidity in real estate. So if it's your, if it's your home, maybe there's some way around it. But what's going to happen if it's about your investment? So let's assume, you're sitting on cash and you find like a very good deal. That's great. You can quickly act. It doesn't matter if it's a stock or real estate. But what's going to happen if you're like a real estate investor and you find a good deal, but you don't have access to this property? So that's the big thing. If you are choosing a real estate route, you need to be ready to allocate and diversify your portfolio. So you're going to, all the time, you're going to have access to the capital. It doesn't matter if it's cash or equity or in a formal loan, because all the time you need to be ready. And also the big issues is, if you have some cash flow issues and you don't have the reserve to cover those cash flow issues, even when the interest is going up and you want to liquidate this asset. So what's going to happen? You need to wait let's assume it's going to take 6 months to liquidate this asset. But it doesn't matter. Maybe you're going to take a loss on this property. But are you able to live with these 6 months of negative cash flow and stay in the positive? So I want to share with you like 4 elements in illiquidity in real estate and how you should change or affect your future investment in real estate. So the first thing, how does that affect you as an investor? Again, if everything is going good and you have illiquid investment like rentals or notes or loans, and you are getting the cash flow, and if you have rentals, everything is going up and everything goes as planned, it's not really relevant. But the main thing, what's going to happen if something goes wrong? So what's going to happen if someone is stop paying you on your note, if someone is stop paying you as a rental, if the interest rate went up and you were positive cash flow and now you're on the negative? What's going to happen? So that's the thing. And how much buffer you have in your bank account, and how much can you service this loss? And that's create a lot of stress on many investors. So you need to think about, in many cases, you need to have your reserve account, so make sure you can leave, so cover all your life expenses for the next 6 months. You can't use those funds to buy investments, because your life is coming first and your investment is second. So the main thing is with the first one, you need to understand this key point, and you need to make an assumption and buffers in your assumptions how to avoid those kind of events. So again, the second point is, if you can mix, again, you don't have to, but if you can mix, liquid and illiquid investment. So again, illiquid investment, it's probably real estate and lending. So if you want to liquidate this asset, it takes time. Can take a month, can take 6 months, or sometimes a year. Depends how desperate you are. So sometimes it's nice to mix them with other type of investment, like paper investments, right? Like stocks, like bonds, or like CDs. But again, it depends on you. So if you need to have access, if you need to have access to emergency funds, everything is accessible. So the third thing is like factors that affect your liquidity. So let's assume you have a rental property and you want to get rid of it. So what's going to happen if you have to do it in the wrong market? So it's going to take more time. What happens if you chose the wrong agent to do it? What's happen if your value of the property is a bit less than the loan amount? So what's you going to do? Are you able to cope with a shortfall? So again, some people they're becoming like negative on the cash flow, but also if they sell, they need to come up with some money out of pocket. Are you able to do it or not? So there are so many factors in this. And of course, like in real estate transaction, there are also associated costs, like legal costs, and you have the finance cost, and you have the commission cost, and so on and so on. So you need to make sure you are ready for it in advance. So how to invest in illiquid asset? I personally like lending. I like to invest in performing notes. So performing notes, I provide a loan for someone that is in a property, usually it's land, for many, many years. So 10, 15, 20, and 30 years. So that's illiquid investment, because again, I'm only the lender, I'm not the owner of the property, and I can control what they're going to do with the property. So maybe they want to build something on it, and then to take a loan and refinance with a traditional lender. Maybe they just want to use this land for recreation and stay there forever. Maybe they're happy with the payments, or maybe they want to sell the property down the road because they don't have any use for it, or maybe they can't afford the payments. They're gonna stop paying. I may need to foreclose on them, or I may need to to reach an arrangement with them just to take the property back. So, but everything takes time. And again, why I like notes? Because I'm gonna get the cash flow. With rentals, what is the problem? Again, if the interest rate change in the market, depends what kind of loan you got. So you may be like positive cash flow or $200 per month, but maybe in a downturn you may be a bit lower than that. Maybe you have to adjust the rent. Maybe there are some new projects in your area, and your house is not that desirable. Your house or unit is not that desirable. So again, maybe the property management, they put the wrong tenant in place and they trash your property, and now you have to spend some, to put a property back and spend some money on renovation. So in summary, I think it's a very important tool in your toolbox to invest in real estate or invest in loans, but you need to make sure you are aware of all the elements that are coming with it. So stay with us for the next video. I'm going to share with you why you should use your self-direct IRA and how you can use it with private lending. See you there.